Now we will discuss multi-time frame analysis. Now, what is the point and purpose of using multi-time frame analysis? It is that we should know the market situation. For example, there is a trend on the 4-hour chart, but we are using the 15-minute chart. There is a trend there. We are also going straight while the trend is bullish.
So what will happen is that our 15-minute success ratio will decrease. Why?
We are tying strategies in a bullish market, so we have to use it for that to know what the overall market story is. That's why we will look at 15 minutes, 1 hour, daily, 4 hours, whichever time frame you want to see, and we will understand the story that a bullish trend is going on in 4 hours.
So collection is starting in 4 arms. Collection is happening in 15 India. We have to combine all of these to get the real picture out of the markets. So what we do, the points we were noting, it gives us a comprehensive view.
It helps us effectively identify the higher support and resistance levels of the market, and keep in mind that the support and resistance of higher time frames like 4 hours, daily, weekly, monthly are more effective compared to the support and resistance of smaller time frames.
Meaning 1 hour, 15 minutes, 5 minutes, 1 minute. Then when using MTF, you identify early spot trend changes because, for example, on 4 hours, you start seeing consolidation on the 4 hours. But when you open 15 minutes, will you start getting the structure on 15 minutes? So if someone unaware says that, at least if I am not selling, then I will also not buy my own. If I have opened a buy, then I will take profit. So this helps you get the comprehensive view of the market. It tells you about every change and gives you the optimum exit point. Now on 4 arms, you have decided whether to buy or sell. Now where do you look for the entry? You open its 15-minute chart. You give the entry according to that. You have to decide the stop loss and take profit there, but you have to decide to trade on 4 arms. And this helps you understand the overall picture. It helps in understanding the actions of other traders.
Now I will give you an example of MTF. As you can see, in 10 minutes it is bouncing on the 200 SMA. Repeatedly it seems to us that the market trend is short, so we sold from there and sold from the SMA, then it went above the support.
So now, how will we know why this happened? We will go to the higher time frame. What did we find out in the higher time frame? Then it was at the bottom of the bullish channel,
on the setting channel, and for quite a while in a rising channel, meaning it is running in a bullish stand. So I had to buy from there, but it's a short time frame because I was using one time frame. I couldn't understand that if on a small time frame of 10 minutes there is a base, but on 4 hours it is in a bad and completely bullish area in the Bindu territory. So what does this do? It helps you. So now, according to your trading style, you have to decide your time frame. We will discuss further what your trading style is in the next chapter. But when we have done fundamental and market sentiment analysis, we will then discuss what your trading style is. Based on that, you need to choose a time. Choose a time frame that matches your personality and trading style and what you need to do. For that, you need to decide your speed of trading pace, how quickly you place trades, how many signals you need, whether more or fewer, and how much time you can dedicate to trading. You need to decide that accordingly. We will discuss that further. Now we will discuss that multi-time frame is very important, and the long time frame describes and defines the overall trend, and significant support and resistance only come from the higher time frame. Why do we use the short time frame? Only for exits and entries. And remember, whenever we ignore the larger time frame, it will be a very costly mistake for us. So how do you do this? Make the first step. You need to open a long time frame. You have to define the overall trend. Move to step 2. The preferred time frame on which you have to place the trade, on which you have to define your trade. You have to go to that time frame, choose it, and find your setup to determine if a buy is possible. What is the potential buying zone? What is the potential selling zone? I have to buy. You have to decide that. Then decide to come to the small time frame. Then you have to see where to make the entry, where to make the exit. Exit meaning profit, where to place it and where I have placed it. So you will choose 3 time frames. Use 2 to 3 time frames.
If you have to use more time frames, you will be confused. Now we will give an example. For example, what does Cinderella say? Cinderella was tired of life. She said, yeah, now my lottery ticket is trading. She watched a video of some expert on YouTube. She said, your son start trading and all the world's problems will be solved. So she came to solve all the problems. She said, I will trade Euro UC. So what did she do? She decided on the 1 hour chart because 15 minutes seemed too fast for her and 4 hours was too slow. So she chose a longer time to start her analysis. The 4 hour chart defines the trend. We discussed this earlier. Then she saw that on the 4 hour chart, the price is clearly in an uptrend. So she understood that she needs to buy because the trend is your friend. Okay, now she needs to buy, and to buy, she has to wait for the trend line. So where does she study the trend line from? It will be on the 1 hour chart. She decided that now she will use an indicator. Just which indicator did she use? She used stochastic. So as soon as the stochastic crossover happened, she saw that a candle had also formed. And the indicator is coming out of a solid condition and a bullish crossover has occurred. So what did Sendera do? Sendera starts buying. But Sendera is still not sure. So she looks for a good point for more information. To find that good point, she goes to 15 minutes. Now, on the 15-minute mark, Sendiara sees that the trade line is holding very strongly. So what did she do? She bought. So if Sendra had bought from here, then what would have happened? A profit of 400 pips would have been made. That's why you have to use multiple time frames. So you understand that you cannot continuously use too many time frames, just like you cannot use too many indicators. You have to decide on 2 or 3 or a maximum of 4 time frames. You should use them properly. 2 to 3 time frames are used for optimum analysis. Practice, switch between time frames, and develop a deep understanding of market behavior. How does the market work in different time frames? Take my example. I am using RSI with my time of 15 minutes.
On 1 hour, 4 hour, at what limit does RSI work as overbought or oversold? It works on 1 hour. Where does it work on 15 minutes, or does it not work at all?
So I have to decide to understand my time frame. So always consider the bigger picture. Always understand your story. Open the chart and see what story is going on, what narrative is unfolding. You have to understand everything yourself, but it can be confusing. It can be troubling. But it's essential to learn from it because the biggest advantage will be given by MTF. Let me tell you, there's no need to apply any indicator, nothing. If you just understand MTF and price action, basic understanding of trend lines, support, and resistance. If you understand it, you don't need to add anything else to be profitable.